So, Bitcoin's at 120k. Some people say the opportunity is gone, others think it's only just starting. The truth? It's somewhere in between. And today, I'm going to show you exactly why I'm still buying Bitcoin every week, even at these prices. I'll explain what Bitcoin is and how it works, why people call it digital gold, the risks you need to know when buying Bitcoin, and why it deserves a spot in your portfolio. Stick around because later I'll break down exactly how I'm stacking Bitcoin every week, even at 120k a coin, and show you a simple strategy anyone can use, or some classic Black Ops 2 zombies in the background. Let's dive in. What is Bitcoin? A brief history and some terminology you'll need to know. Bitcoin was created in 2008 by Satoshi Nakamoto and began use in 2009 when Satoshi mined the first block. This is often referred to as the Genesis block. Bitcoin was designed to be a decentralized, peer-to-peer digital currency. It allows anyone to instantly send Bitcoin to anyone in the world without the need for a bank or a payment processor in the middle. That's where the blockchain comes in. The blockchain is what allows Bitcoin to operate. You can think of the blockchain as a public record or spreadsheet of all Bitcoin transactions in chronological order. The blockchain is shared between every user on the Bitcoin network and is used to verify every transaction and prevent any fraudulent transactions. Thousands of computers worldwide, called nodes, keep the blockchain secure. Transactions are grouped into blocks, and miners compete to confirm them by solving puzzles. The winner earns new Bitcoin and transaction fees. Mining is the only way new Bitcoin enters circulation. Once verified, the blocks gets added to the previous block, creating a chain of blocks, which is why it's called the blockchain. Here's where Bitcoin becomes really interesting. Even though miners create new Bitcoin, there's a hard limit built into the code. There will only ever be 21 million Bitcoin in existence. No government, company, and not even Bitcoin developers can increase this limit. On top of that, the amount of new Bitcoin created by miners is also decreasing by a process called the halving. Every 4 years, the rewards for mining a new block is halved. For example, before April 2024, miners earned 6.25 Bitcoin per block. After the halving, this dropped to 3.125. This built-in scarcity is a big reason why Bitcoin's value keeps rising over time. But why are so many people buying Bitcoin? Its built-in scarcity is why people often refer to it as digital gold, a store of value like traditional gold but much more liquid. People also see it as a protection against inflation and currency devaluation. In the last decade, Bitcoin has had an annual average return of 82%. This far beats other assets like the S&P 500, which has grown 13% in the same period, making Bitcoin one of the best performing assets of the decade. Adoption keeps growing too. Companies are holding Bitcoin on their balance sheets, mainstream ETFs and retirement accounts now offer exposure, and it's accessible. You can start with as little as $10, unlike real estate or stocks. Of course, Bitcoin isn't without its risks. The biggest one is volatility. Bitcoin can double in price in a year, but it can also drop 50% just as fast. This is why you don't want to be investing with money you can't afford to lose. Another risk is the constant scams and rug pulls in the crypto industry. Think meme coins and shady exchanges. Thousands of new coins pop up every year and hardly any serve any real purpose. Bitcoin, however, is the largest and most mature asset in crypto, which is why we stick with it. Finally, government regulation adds uncertainty. Governments are still trying to figure out ways to tax and control crypto, which can cause short-term price volatility. So why even buy Bitcoin in 2025 when it's already gone up so much? Remember, Bitcoin is scarce. Only 21 million Bitcoin will ever exist. The actual amount circulating is far less, as it's estimated 3.8 million Bitcoin have been permanently lost. With supply limited and demand increasing, Basic economics suggests that the price could keep rising. Plus, the new supply is only decreasing as more halving cycles play out, and new supply generated by miners is cut in half. Historically, these halving cycles have been a major catalyst for price breakout and have led to huge surges in the price of Bitcoin post-halvings. Adoption for this asset is only increasing. There are now Bitcoin ETFs, banks accepting Bitcoin, and offering Bitcoin-backed loans. Even countries accepting Bitcoin as legal tender. The world is slowly moving towards adopting Bitcoin and treating it as a serious financial asset. Bitcoin is currently the 8th largest asset globally by market cap. This puts Bitcoin ahead of giants like Meta and Tesla, and not too far behind silver, which is why I'm confident in its future and I'm stacking as much as I can. So how am I stacking Bitcoin? You might have heard the term stacking sats. A sat is the smallest unit of Bitcoin, like cents to a dollar. Stacking sats just means regularly buying small amounts of Bitcoin over time. Personally, I keep it simple. I have an automatic transfer set up from my bank to a Bitcoin only exchange. I use a Bitcoin only exchange as the fees tend to be lower, meaning I'm getting more Bitcoin per dollar I put in. From there, once my dollars are on the exchange, I have an automatic dollar cost average buy set up where every week, no matter the price, I'm buying a set amount of Bitcoin. This way, I can avoid having to time the market and won't get emotional when Bitcoin has a dip or rallies. Doing this, I don't have to worry about the price as my cost basis is spread out across the fluctuations in price. Now the most important part is once my Bitcoin is purchased, it's automatically sent to my cold wallet. This means I control my Bitcoin directly and not the exchange. For me, this is the safest way to accumulate Bitcoin as it's automatic. I don't have to worry about anything as it's all done for me. It's consistent. No matter what, I buy every week. And it's in my own self-custody. That's why I'm still stacking sats every week, even with Bitcoin at 120k. You don't need to go all in. Even small, consistent buyers could add up big over the next 5 to 10 years. If this video has helped you, hit like so more people can see it, and drop a comment. Are you stacking or still on the sidelines? I've got more investing breakdowns coming, so make sure to subscribe. Thanks for watching, keep stacking, and I'll see you in the next one.